My name is Alexa. I'm the manager of operations here at BPM RIA. And I'm just going to give you guys a couple of announcements before we get started with our presentation with Ron Schmitz from A to Z Capital. And he will be, discussing how we can finance our investment properties. So we do have a giveaway today. Keep in mind, I will be putting all of this information in the chat section of the Zoom. So you guys can go to the chat. You can see all of this if I'm going too fast. So for our raffle today, you're going to text the word finance, FINANCE, no little marks here, just the word finance, to 954-800-6961. And you'll be able to win this amazing prize, an amazing Amazon Echo smart device. So go ahead and do that. And I'll be putting that in the chat for you guys who missed it. So just a couple of upcoming events that we have this month of March. No, I don't have a secret admirer. Those roses are for my mom. It's her birthday today. So just letting you guys know. So happy birthday to all the April babies. We have great webinars this month. Equity Trust next week, managing real estate and self-directed IRA. RIAFax workshop. Francisco Mago actually has a new technology that he's rolling out. So you're going to want to be at that RIAFax workshop. All of our students and everyone who's using RIAFax, don't forget we have our discount code for RIAFax. You can always reach out to the office if you are wondering what that is. And then huge mark your calendar, big star, red lights, in-person meeting, April 6th at the Signature Grand. Ron and a bunch of other corporate vendors that we have will be there for the networking portion from 5:30 to 7. And then we'll dive into an educational portion from 7 to 8:30. We're going to dive deep into apartments. So don't want to miss that, guys. It's going to be great. Signature Grand and Davie, we're going back to the old spot because everybody wanted to go there. So we're going there. So Nova Southeastern, heads up, anybody looking into furthering their education, we have fantastic opportunities with Nova Southeastern in their real estate program. So heads up for that webinar, April 12th. If you want to keep up with our events, go ahead and text BPM RIA to 800, our number 954-800-6961. I will be putting this information in the chat for you guys so you don't forget it. And that's probably the easiest way to keep up with our events. I know we have a lot going on, but you have to take advantage of these resources that we are giving out to you guys. So our next boot camp is May 7th and 8th. This is on Zoom. This is online. It is live. You are on Zoom all day long with Anish, Saturday and Sunday, 9 a.m. to 5, and you're diving deep into all of these topics and more. You get, one-on-one Q&A with Anish and our 4 guest speakers that we have on this 2-day training. It's a really great opportunity. Members get a discount. Non-members pay $5.95 for this, and this is awesome. There's a lot of people who have gone. So I'm sure if you've gone to the boot camp or quick start, you can just kind of put something in the chat letting everybody know how awesome it was. We would appreciate that. But yes, let me know if you have more questions about the quick start. It is great. So as you know, we have memberships to our association. If you're a business owner and you believe that we're in alignment with each other and you'd like to, get all these great benefits, reach out to me. We can talk more about that. Anyone who wants to get into the meetings free, get amazing discounts, the National RIA package, discounts, the quick start, and much, much more. You're going to want to get yourself the individual membership. And you can find all of this on our website, bpmria.com. So as some of you know, we do have the one-on-one coaching programs available. If you have any questions about this, you're going to want to give me a call. It's a very unique opportunity. We do coach those one-on-one that are interested in wholesaling, rehabbing, flipping, many different opportunities that are available in real estate investing. We actually put up 100% of the money for our students and do profit split. So this opportunity really does get you the ball rolling for your business. If you are not sure where to go, just give me a call. We can talk about it. and I'm more than happy to schedule something. You can go to bpmria.com and actually schedule a call with me to talk about the programs. So we always want to thank our sponsors, being a part of National RIA, the only approved chapter in South Florida. We don't take that lightly. So we do want to thank our sponsors. There's so many of you guys, and as well as our corporate members like Ron. Don't want to take Ron's time. He is awesome. Without further ado, Ron, I will let you introduce yourself. I know you and Anish have been friends for quite some time, and I've known you for a little over a year. And just meeting you for the first time at the January meeting, it feels like we've known each other for a lot longer. So just thank you for being here. And I'm not going to take your spotlight anymore. I'm just going to shut up.
Okay, well, thank you for the introduction. Hello, everyone. Good morning. My name is Ron Schmitz. My company is A2Z Capital. I've been in the mortgage business about 20 years. I'm probably one of the more experienced people around. I'm fairly successful at it. We get a lot of deals done. If you look over the back, there is my little board that I crayon how many deals that are pending. I have 35 deals in the pipeline, just to give you an idea how busy we are. I have an excellent team of 2 processors that process all my files for me, and my team always gets the job done. One of the biggest advantages in dealing with my company is that we cover all bases. Every loan that a small investor could possibly want or need, we have the best access to get that done at the most competitive pricing. First and foremost, we're hard money lenders. To me, a hard money lender is a non-institutional loan, meaning that it's a private investor that you'll be making your payments to. I have a lot of investors. We probably have about $16 million of money that goes in and out. These are normally short-term loans. When people find a property from a wholesaler and they need to close quick, that's probably the only way we can do it. All we need is a title commitment and a lien search and acceptable collateral. Every deal stands on its own merit, but we usually get together with the borrower and we can close very, very quickly. Usually the terms with most of my competitors, they give like a 1-year term on the money. I can be flexible with that. I've had hard money loans that are out for a long time, 3-4 years. I usually write them 1-2 years or up to 3 years. But if my borrower's not ready to pay off for whatever reason, I usually don't run them through the ringer and make them pay more extension fees and all that. I usually will just, if it's not going to be too much longer, I'll just let the loan roll and keep the money out there until you're ready to get out of the hard money loan. The rates are higher on the hard money loans. We're in the 10% area, which is very competitive, 1 to 3 year terms. And it's kind of high rate money. People don't usually want to stay in that money that long. As soon as the property is stabilized and they have rental income, I will be standing there waiting to get you out of my hard money loan. And usually I've been successful in chopping the interest rate in half and getting a long-term institutional loan. Before I get into long-term institutional loans, I'd like to talk about option B, like semi-hybrid hard money, I guess we would call it. And another word for it would be a buy, fix, and flip loan.
So Ron, how many, I know you were talking 10% range. How many points generally? You didn't really, I know it depends on the experience.
Depends on the loan size. Most often it's a couple points.
Yep.
Yeah, I would say a couple points. Unless it's like every once in a while I get a little tiny itty bitty baby loan where somebody wants me to finance 50 grand to do a rehab or something like that. And I might have a minimum fee of 3 grand on a loan. And then 2 points or maybe 3 points if it's a real tiny loan or something,
Oh,
it's negotiable, whatever's fair, we work it out normally.
absolutely.
The next thing I want to talk about is hard money loans that I kind of broker out, or I do broker out, because I don't have a construction department with draw inspectors and like these big companies have. But I have an extremely, extremely good relationship with a lender that I'm able to do almost the same as my hard money loans. I can be very liberal. I can fund 80% of the purchase and 100% of the rehab. And the way that works is the rehab money at closing goes into an escrow account. You don't pay interest on this money until you use it. And a typical scenario is if a investor has a $50,000, $60,000 renovation or 80,000 or whatever the number is, they release the money as the work goes on in draws. Usually 3 draws is how it works. I've recently done deals on multi-million-dollar properties where the renovation might be 700,000-800,000 on a $2 million house. And they don't charge interest until you take the money. But I found these guys that are flipping these more expensive properties are making a fortune. One that I funded about 5 months ago, the guy's selling the house right now. He called me yesterday to get a payoff, and he's making $700,000 profit on this one house, which I thought, wow, that's great. Maybe I should start flipping a few houses, in the higher dollar domains. Down in the lower domains of the typical $200,000, $300,000, $400,000 purchase, there'll be more competition on those deals. But anyhow, long story short, buy, fix, and flip deal, quick closing, couple of weeks, 10 business days. We can provide the construction, the rehab part of the deal at 100%, and the purchase at 80%. So after all that's done, now we have a stabilized property, and we have an experienced borrower who's bought a property, he's fixed it up, and now he has to decide, am I going to flip it and make the money for today and build a war chest for the next deal? Like the BRRRR method, BRRR method that we'll talk about in a little while. Or do we want to keep it and rent it out? Recently, a lot of deals I've been doing, people are purchasing quality properties and turning them into short-term vacation rentals. And from what I understand by talking with these people, they're getting anywhere from 2.5 to 3 times the normal rent you would get if you had a 12-month lease. So if you have a 12-month lease that you would get $2,000 a month, if you make it a vacation rental, you're going to get $5,000, $6,000 a month. If you don't have time to manage it, a couple of my customers that I've done several of these loans also have a company where they manage these things. They charge anywhere from 10 to 20% of the rental income to manage the property for you, depending on what level of management. I don't do that, but I have some guys that are very good at it that do that. When you're making 2.5, 3 times the income, you can afford to have a property manager. If you're in another business like me, I wouldn't have time to do it. I would hire a property manager if I bought an Airbnb property. So anyhow, so somebody comes to me and wants to do a loan on an Airbnb property. Well, the loans that are out there, most small investors don't, when I ask them for their tax returns and proof of income, forget about it. I need no income documentation loans, and that's what we do. I don't ask for tax returns, pay stubs, proof of income. The loan is underwritten based on the rental income. And typically, they will take the 12-month lease on the appraisal, the market rent, $2,000. That'll be on the lease, and that's what they use. So in order to fit this DSCR loan and make it work, the principal, interest, tax, and insurance has to fit into that $2,000 a month payment that we're talking about. And how do we do that? Recently, they have a new product came out in the beginning of January that I've been doing very, very well with it because it makes sense. We do a 40-year fixed rate loan for a long-term loan. And the first 10 years is interest only. Okay, so a quick example that I wrote down. Let's say you wanted to buy a beautiful Airbnb property that's in a great location and you can buy this property for 600 grand. And you want to do a loan for 500,000, $500,000 loan. I wrote down what it was. With the interest only, with the average interest rate you're going to get on these properties, you're going to be 500,000. It's going to be about 2,300 a month. 500,000 to carry for only 2,300 a month. That's pretty darn good when you put a pencil to it. And you add the taxes and insurance to it, and that's your total payment. After the 10 years interest only period is up, they amortize the remaining principal balance over the remaining 30 years of the fixed rate loan. They don't change the rate for the whole 40 years. And that works out good because when you do the interest only payment, it's easy to meet the DSCR, the debt service coverage ratio. People might say, what's DSCR? DSCR is debt service coverage ratio. An illustration of one-to-one debt coverage would be whatever the rental income is, the principal, interest, taxes, and insurance has to fit into that number and cover it on a one-to-one. You get a little bit better interest rate if it covers at 1.25 or even 1.15. So depending on the coverage, it may affect your interest rate by a little bit. We've had many, many lenders we work with. Sometimes I'll get somebody who buys a property very cheap at the auction or something like that, and they want to cash out, refinance it. Well, 99 out of 100 lenders require 6 months seasoning. So that would mean that you have to go off of the appraised value. You got to wait 6 months. Except for one lender. I have a trick up my sleeve. I have one lender with no seasoning. You can buy the property at a big discount at the auction or something like that for 300,000, and let's say the property is worth 375. That guy can call me and I will cash him out at 75% with no seasoning. I don't know too many lenders out there that have that product, but we do. So that's another good thing. Many things to talk about. I get clients who call me on the phone and ask me questions, and I have to say that every deal stands on its own merit. The first thing I ask when I get a prospective borrower on the phone is, tell me your story. Tell me what you're looking to do. And I listen very carefully to what they're looking to do. And after they give me that information, there's a little search engine, you know, that little circle when you go to Google, when it's looking for something. I have a similar thing to that in my brain, but it's much smaller than Google, you know, and while you're talking to me, that little search engine is going in my brain, and my brain is matching you up to the most compatible product for whatever your individual situation is. Moving on, I want to talk about home loans, because in the beginning of this little seminar, I said that we do everything. We cover all bases. Every loan that an investor could possibly want, we carry. Short-term loans, long-term loans, buy, fix, and flip loans. And some people come to me for a home loan and use a regular Fannie Mae, Freddie Mac product, which is available for investors too. I don't do a whole lot of those transactions, but I do some. The reason I don't do a lot is because those are full income documentation loans where I need to get your pay stubs, your tax returns, and the transaction has to fit into Fannie Mae's debt to income ratios. A little more underwriting, but the interest rates come out less than a DSCR loan, probably on the average a full percentage point less. So if you have good tax returns that show good income, I may have another option for you. And we'll find that out when you call me and we talk about your scenario. We will decide what is best for you. Not what's best for me, what's best for you. And we will always recommend the lowest cost way of getting the job done for you. Most of the times when we do a regular home loan, which we're a licensed home loan provider, my favorite lender to use, I use Quicken Loans. I find that they have a great wholesale department and their interest rates are always a little better than what everybody else is. They're easy to work with. And I've used Quicken Loans. We're a approved provider of their products, and they've done a good job for us and our borrowers. So to cap it off, we do hard money, short-term loans, buy, fix, and flip. We do long-term rental loans. I told you about the 40-year loan with the 10-year interest only. Sometimes I'll get a borrower who says to me, I don't want 40 years. My goal is to pay this property off and build equity and have the property hopefully paid for by the time I get ready to retire, and that will help with my retirement income. Excellent strategy. That's why many people become small real estate investors, to improve their retirement prospects. So if that's your goal, that's fine. If you take this 10-year loan, interest only, 40-year loan, 10-year interest, there's nothing forcing you to only pay interest only. We might do that loan so that we qualify to get the numbers to fit into the DSCR. If you want a 30-year loan, just call me up and say, hey, I want this thing paid off in 30 years. Just go into my computer, pull up the amortization schedule, put in the loan amount, 30 years amortization, interest rate, and it'll pop up and tell you what the principal and interest payment would be for 30 years. You're free to make that payment if that's your goal, to pay it off in 30 years. You don't have to pay the 10 years interest only. A lot of folks with these Airbnb properties, their goal is to get them paid off quickly. The income is so great on these properties. If you throw all the income at the debt, you can usually have these properties paid off in 6-7 years. Wouldn't it be nice to have a free and clear property that's bringing in $6,000 a month? That would be great. If you had two, that'd be $12,000 a month. Sounds like you're getting close to retirement. You know, I have clients that have 4 or 5 properties like that. I have a gentleman in the Keys who has 2 very expensive, like 10-bedroom houses in one of the Keys down there. And he's been an entrepreneur all his life. He retired in Florida. He's from Washington State. And he's owned several businesses. And he told me that never in his life has he had a more profitable business than what he has with this Airbnb. His 2 properties were grossing like $950,000 a year. 2 properties, 10-bedroom houses, very expensive properties in the Keys. His net profit after expenses on the 2 houses was like $450,000. That's pretty good business, you know, and when you can do high leverage and finance 80% of the purchase, you know, the biggest profits are made on the real expensive properties. If you have the, if you're ready to go that far, I wouldn't recommend that be the first property to go after when you're a brand new investor. You got to walk a little bit before you start running. But there's big money to be made in these vacation rentals. It's like owning your own small motel or hotel. Also, a lot of people come to me, they have hard money loans out and they want to get out because they're paying too much interest. Here I am. We handle everything. We do a long-term rental loan, products we just talked about. Cash out. A lot of people bought property 5, 6, 8, 10 years ago, and they have a lot of equity. And they want to start expanding their rental portfolio, but they need money. So we'll give them a cash out loan. We'll cash them out 75, 80%, whatever works for them. Now they have money in the bank to go start another property. I have a deal in the pipeline right now where a guy's cashing out 6 of his properties to buy a real expensive one in the Keys that he plans on making over 100,000 net profit on. So he's cashing out 6 properties that he bought years ago that he's got lots of equity in. And those are the kind of deals we like. I have another borrower right now that's doing a blanket loan. If an investor has a portfolio of properties of more than 5 properties, and the loan amount's going to be 500,000 or greater on these 5 properties, I can do a blanket loan and get long-term, low-rate interest on these properties. These products work out great, and I've done several of them. A lot of times people will go into lower income areas. I had a gentleman that owned 30 houses and row houses in Baltimore, Maryland, right near Johns Hopkins University. You know, the old brick row houses that you see in the older cities in America. He bought all these properties and he had about 70, 80,000 in each property, row houses. And he strategically bought them all within walking distance of Johns Hopkins, the world-renowned hospital that's in Baltimore. And he gets about $1,200-1,400 a month rent on these properties that he only has 80, 90,000 in them. So the cash flow is huge. Now, if you were to come with me and say, hey, I have a property worth 80, 90,000 and I want to cash out, refinance it, that's below the minimum loan amount. I can't help you. I can't do these 40-year, 10-year interest only loans. And if the loan amount is below 100,000, I can't do it. This is a great product where these people that buy the lower priced houses and have a blanket of them, you can do a property that is only worth 50,000. They'll finance it. Where else do you get to finance these inexpensive properties? I have several clients, they own 30, 40 of them. We put them all together, one big loan. Rates right now are probably high 4s, low 5s, long-term fixed rate money. Excellent option. We do that too. Multifamilies, anytime you have a more than 4 units, you'll get your best and lowest financing on the 1 to 4 unit residential properties. As soon as you go to 5 units, then it's considered to be a commercial loan. And the rules of the game change around a little bit. The rates get higher and the underwriting gets a little bit deeper. But Ron at A to Z Capital has an option. I have a lender that will do up to 29 units on multifamily and use the same rules as a DSCR loan. If the rents cover the payment and everything, it'll qualify. No income, no personal income required. And that's a brand new product. Didn't used to be able to do that so easily. Today we can, up to 29 unit multifamily. So if you find a 10 unit, a 5 unit, an 8 unit, a 15, 20, up to 29, we can provide long-term fixed rate financing on these loans. So keep that in the back of your mind. I think there's a seminar coming next week, I believe, Anish, that they're going to talk about multifamily. So
Yep. Yeah, actually next month, Anthony Charles, our main speaker in April, is going to talk about multifamily. So
yeah, maybe I should talk to Anthony and tell him about the deals. I can do up to 29 units with
and the question I'm seeing a lot in the chat, do you only lend in Florida or?
No, we lend nationwide. Some loans and some states we don't do. There's a couple states out there that are non-business friendly that won't, all the laws and rules they have are favoring the consumer so much, and they're anti-commerce type states that we can't loan in. They won't allow the lender to give a prepayment penalty. So lenders don't want to be in there. We loan in New Jersey and New York, but there's only a couple lenders that'll go into New Jersey and New York. If God forbid you ever have a loan that defaults, you'll fight for a year or two to get the foreclosure done on the property. They have very strict consumer rules. Even if I would never want to be a landlord. I don't want to in New Jersey, because if you have a tenant that stops paying rent, it takes a year to get the guy out. They have very consumer laws. One thing good about Florida, if you're a landlord and somebody stops paying you, you give them the 3-day notice. If they still don't pay, you can move towards eviction and usually get them out 2-3 weeks. and get them out and only lose a little bit of rent money. But other states, it takes forever. You know,
Yeah, what about, I know you were talking about the no income, no doc loan indirectly. What kind of loan to value? How much money
on the
would,
long-term ones,
Yep.
we can go as high as 85%
okay,
on a purchase and 80% on a cash out refi. To get that high leverage up to 85%, you're going to get a significant rate bump, like an extra 0.375 in the rate bump, just to get that extra 5%. I always try to encourage my borrowers to do an 80% loan, and even the rate gets a little better if it's 75. The lower the loan to value, the rates drop. When I price out these loans, they're loan to value and credit score driven. So the lower to loan to value and the higher the credit score, the lower the rate. I've recently closed loans 4% area. When it's a low loan to value and a very high rate, I can come in with a no doc loan close to 4%.
got it.
So,
Yeah, I mean, yeah, that makes a big difference, you know. What happens if you're new, right? I know we have a lot of newbies, and do you guys look into that, or are they looking for history, or how does that work? Yeah, I know you work with a lot of different lenders, so I know that makes a big difference. Whether it's
yeah, it is, you know, historically, most loan defaults on buy, fix, and flip or hard money are with, I don't want to, you know, cast a bad thing on new, but most of the defaults are with people that are inexperienced, that make mistakes and get themselves into trouble. So the lenders care about your experience. You're going to get a higher loan to value and a little bit better interest rate if you have experience. But we do work with newbies, you know, I would say on a buy, fix, and flip, we can still get you 80% of the purchase and 100% of the rehab, but they're going to make sure that you have at least 6 months payments and reserves after closing. And if you're going to get involved with the deal, they want to see the initial money to get the rehab started. A brand new investor, it's kind of hard to go in on a shoestring. If for the first deal, to get a first deal under your belt, if you don't have a lot of money, I would encourage you, well, join Anisha's team. They have a training program, and they put up all the money for you for the first couple deals till you get some experience behind your belt. But we will loan to an inexperienced guy, but it's a little more difficult unless you go to Anish with his program. I think they fund the whole thing, right?
Yeah, we sure do. But yeah, we go 50-50 on the profits. But, you know, this is really, even if they go through our program, the idea is to become your own investor and to leverage, you know, other people's money. And the best way to do it is, you know, using hard money or even lower income money. And I know I always get this question all the time is, oh my God, it's, you know, 10% or 12%. It's all relative, right? So again, you know, Ron's talking about short-term loans for a year. He's not talking a 40-year loan at 10%. You're going to be out of business pretty quick, or the numbers won't make sense on the property more often than not.
That's true. 100% correct.
Yeah, I mean, I got some questions that are kind of rolling in. So
yeah, let me answer some questions. Anybody has some questions out there, I'd be glad to answer them.
Yeah, so one's asking, Leonardo's asking, are the loans issued to an LLC or an individual?
In Florida,
Yep.
It has to be an LLC for a business purpose loan. Other states out there, it's a state by state requirement. Some states don't require it. So it's always better to put the property for covering your assets and everything for asset protection. I would highly recommend that you buy the property and put it in an LLC.
And then the second question on that also is, will you do it in a land trust? Do you lend on a land trust, or does it have to be?
We'll do hard money and short-term loans on a land trust. I'm not a big fan of land trust because they're very financing unfriendly. When it comes time to get a regular loan, an institutional loan, or a long-term financing, you got to take it out of the land trust. And I know that there's a lot of people who advocate land trusts. I don't, you know, because it's a pain in the neck when you go to get financing, when you have it in a land trust. I would recommend putting them in an LLC unless you know for sure if this is just a straight buy, fix and flip and you know you're going to flip it, then you can do it in a land trust, but other than that, a land trust makes it hard to get the property financed. And the anonymity that they say that land trust creates, I'm not so sure I agree with it, because I happen to own a few rental properties in a certain area, and there's 6 properties, and I put each one of them in the land trust because that's what was recommended to me. And then I had a problem with the tenant not cutting the grass or something, and they slapped the code thing on me, and it went to all 6 properties. I thought that they weren't supposed to know about the other 5, but they knew about it, and they slapped it across. So I don't believe that it really hides
Sure,
your anonymity like advertised. So that's why I don't recommend the land trust, but
sure.
some people disagree with that.
And I know they're asking, I got a few questions about prepayment penalties. Do all your loans have prepayment penalties? Some or
On the short-term loans, some of them have a 6-month interest guarantee. Some of them have a 4-month interest guarantee, minimum of 4 months, and some of them have 0 guarantee. So we can talk about those options when you call in, and you can make an individual decision depending on what your need is. Most people, if they're doing a buy, fix and flip, they're going to be in the property 6 months probably. By the time, you get it fixed and get it done, get the permits closed out, and then find a buyer, the buyer finds his loan, 6 months is normally going to tick by.
Yep.
So it's
And
usually a non-issue.
yeah, and I'm gonna kind of just explain that. So when he says the guarantee, when Ron's talking about the guarantee for 6 months, let's say you finish it in 3 months and you want to sell it. What he's saying is the hard money has to get paid at least 6 months.
Yeah, so you'll call for a payoff, and on the 4th month, you're going to get a payoff that's going to include the 5th and 6th month in there if you want to pay it off in 4. I almost never see that happen, and if
Yeah.
somebody claims that they're going to need it paid off in 4, then I have different products. And if you put an extra point down, it lowers your interest rate and also gives you no prepayment penalty. So there's options for somebody who claims they're going to buy the property and sell it in a month. Then we have options for that type of borrower.
Yeah, and actually on your 40-year program, does that also have any prepayment?
Those
penalty?
have prepayment penalties. To get the lowest interest rate, there's a 5-year prepayment penalty. It's 6 months interest on 80% of the principal balance. So
Got it. And so on the prepayment penalties, remember, if you refinance it, that's part of it. It's not just when you sell it. So if it's within the 5 years and you refinance it, you're gonna have a prepayment penalty.
you're going to have a prepayment. So if you pay it off in the first 5 years, there's going to be 80%. Take 80% of the principal and take the interest rate and figure out what 6 months interest is, and that's going to be your prepay. If you think you're not going to be in it 5 years, and we talk about this up front, for a 1/4 point higher in the rate, we can reduce it to a 3-year prepay. And if you only want it for 2 years, a 1/2 point will buy the prepay down to a 2-year. And you can even do a 1-year prepay, but you need to pay a lot of points up front. It's really not a good loan for you if you're planning on, the long-term loan is not good if you plan on selling the property within the first year or 2.
Yeah, exactly. So, I mean, yeah, it makes a big difference. And again, like what you're noticing, what Ron's saying, there's a lot of flexibility. And, when you're talking to Ron and you're, tell him what your exit strategy is. Is it going to be 1 year? Are you fixing and flipping? Are you going to do the BRRRR method? Because he'll put you in the right loan. And that's one of the advantages with Ron is, as a broker, he has a lot of different opportunities that one size does not fit all. I always get this question too. One of the questions is, why should they go to someone like you versus my normal bank down the street? Like Chase or Bank of America or any of those. Like, what makes you different than the other lenders out there?
If you go to one of the big box lenders, like, Bank of America, Wells Fargo, one of the SunTrust or whatever. They only offer conventional loan products. We call them govy loans, government loans, FHA, Fannie Mae, Freddie Mac. And they're loans that are kind of subsidized by the government. Separate government entities guarantee the loans to the lenders. And those are the lowest interest rate loans that you can get out of there. And there are no prepayment penalty. I mean, you can get an investment property done on a Fannie Mae loan. A strong borrower can get it done, and I can get it done for you. I need to ask all the pre-qualifying questions to the borrower to make sure it'll fit into what they're looking to do. But most people don't qualify if they're self-employed people, but a lot of people that are buying rentals, they have real good high-paying jobs and their tax returns and everything look good, and they do qualify for a regular conventional loan, even on a rental property. And while we're on this subject, I've seen a couple of young investors do this, and it works out great for them. You don't have to be young, but let's say a newer person does an FHA loan. You can do an FHA loan on up to a 4-unit property. So if you want to get your feet wet, the first property that you buy can be a 4-unit property, and you live in one and rent out the other 2 or 3 units. And usually the rental income will cover most of the payment in many instances. So a brand new investor gets his foot in the door, gets an FHA loan. You can do a 96.5% loan. So 3.5% down, you have to pay the FHA upfront funding fee, and you have to pay the mortgage insurance. But the FHA interest rate is very low. It's the lowest interest rate of any loan out there. And you can lock in a long-term 30-year loan with only a 3.5% down payment, and you can start out owning 4 doors. A couple years go by, you want to move out of the unit and buy a single house or a different house for yourself to live in. You have a long-term fixed rate loan locked in on that FHA money, and it works out fantastic for a brand new investor that wants to get his feet wet.
Yeah, and what that really calls, and some of you guys might have heard of it, it's called house hacking. So that might, if you ever heard that terminology, where you're exactly what Ron's talking about is you buy one, or you buy a multi-unit and you live in one and have the cash flow pay basically your mortgage down. So it's an easy way to build your portfolio with limited amount of cash up front. So we've seen that a lot. I do have questions about, are these programs applicable to Canadians, or should I say even foreigners altogether?
Yeah, basically we do foreign national loans for investors, and everything is exactly the same, except the rates are probably about a 1/4 point higher on a foreign national loan, and the LTVs are usually maxed out at 70% for a foreign borrower with the loan products I do.
Okay, what about types of properties? I know you talked about multifamily, single family. Do you also do condos or high-rise condos? What kind of?
Yeah, we do condos, high-rise, low-rise, non-warrantable condos. What's a non-warrantable condo is a condo association. A lot of things can make it an unwarrantable condo. Like if there's one owner that owns more than, I think it's 25% of the units in the project, then it's a non-warrantable condo. If there's not enough money in the budget to cover repairs and stuff like that, that can deem it an unwarrantable condo. We do those properties.
Awesome. What about on your 40-year loan? Is it all one loan or is it 2 loans? Carlton's asking.
It's one loan, 40-year fixed rate, one loan, where you have the option to pay interest-only payments for the first 10 years.
Yep.
When the 10 years is up, the remaining principal gets amortized over the 30 years that are left on the term.
What about land loans? So, Keisha's asking that, I'm interested in buying land. I want to know if you lend to someone like me when it's only the land, not a house.
Only time I'll ever loan on land is hard money. And I look to be about 50% maximum. And
Okay.
I don't want a loan on land that's out in the boonies somewhere, that's $1,000 an acre or something like that. It's got to be very picky about land. And the reason for it is land produces zero income. And if it's just a plot of land, there's a
Right.
higher probability of a default, because there's no rent coming in on it. So
Exactly.
investors don't like land too much.
Yeah, and I think you touched on it too, right? You'll do a construction loan if they want to build on it.
We'll do a construction loan, but I get a lot of calls for construction loan. It's not for an inexperienced borrower. You need experience. You need to have at least 3 buy, fix and flips or buy, fix and rents under your belt in the last 3 years to qualify for a ground up construction. They're a little bit more straight. It's not for a beginner to go out and buy a lot and build his own house. Lenders don't trust inexperienced people with that task.
Yeah, I totally agree with you. And Rose is asking, is there a limit in the amount of properties or loans that one can have? So I know.
No, not with us. If you're doing Fannie Mae, Freddie Mac, conventional type of loans, the maximum that they will approve you for is 10 properties. And then these other products that we're talking about, the 40-year with the 10, there's no limit on the amount of properties that you can own.
Yep. And Trina's asking, do you do a hard credit pull on your hard money loans?
If I get a borrower that for some reason doesn't want a hard pull, just ask me and I'll do a soft pull. Doesn't really matter. When you do a lot of pulls, it can bring your credit score down a little bit, and people are concerned about hurting their credit score. But if somebody calls me for a loan and we do one pull, it's kind of a misconception for the person to think that that's going to affect their credit score. One pull does no effect at all. You have to have multiple pills before it starts to affect your score.
Absolutely. Do you inspect or evaluate the property as part of your review before issuing a loan to an investor?
Do I personally inspect it? No. I pay somebody to go do that job for me. I don't have time to leave the office and go inspect every property, but they have. I recommend if you're an investor and you're buying a property to get a home inspection to make sure it's structurally sound, the electrical and plumbing and all that. Know what you're getting into. See if the roof is good or not. And I've already made that mistake. One time I bought a property without inspecting it because it was so cheap. I jumped all over it and it was a trap. The property had a foundation issue that it cost me 60 grand to fix. And I ended up working on that property for 8-9 months, getting it all together. And by the time I sold it, I just got my money back. So that was a mistake that I won't make twice.
Absolutely.
Get a property inspection.
Always. It's the best.
Spend the money.
Yeah, it's worth the money also. What about, do you need surveys also on your loans?
Sometimes I waive them. If it's a property that's been around forever in Fort Lauderdale, Hollywood or whatever, and it's a hard money loan, I'll waive the survey, most of the time.
And I think you already answered this, but your hard money loans, how long is the term? Is it 12 months to 2 years?
1 to 3 years.
1 to 3 years, okay.
Depending on what the borrower wants. And I'm kind of flexible with extensions. I know my competitors are not. If you come up at the end of the year, they want to charge you the points and everything all over again. And it makes that 1 year loan pretty expensive. If you get to the end of the year and you need an extra 2, 3, 5 months, I just let it roll and I don't charge you anything,
Yeah, and I think you also said, so the question I made, do you always provide 100% of the rehab cost?
On an inexperienced person that has a lower credit score and it appears to be a risky deal, they may only approve that person for 75% of the purchase and 90% of the rehab. They'll want that weaker type looking loan to have more skin in the game.
Sure. And speaking about also, we're talking about credit score. What's the minimum credit score you could work with on a hard money and on a regular loan?
On a hard money loan, I will look at the credit score. If we're doing the loan with our money, I'm not real concerned with the credit score. But if I open up a credit report and the guy's credit score is 514 and I look at nothing but loans that he never paid, it's going to make me think, if he didn't pay anybody else, what makes me think he's going to pay me? And that's probably a borrower that I'll pass on, because one thing I don't have time to do is fight and chase payments every month. I'm looking for borrowers that have the ability to repay the loan as promised. So I will look at a credit report, and if it's atrocious, I might turn the loan down. Otherwise, I'm not real concerned with a couple late payments and medical collections, and I'm not concerned with a 580 score because the guy didn't pay his doctor bill or whatever it is. You know, we overlook that kind of stuff with hard money. Institutional lenders, you got to be 600 or better, minimum 600 score. Nobody that I know of will give a loan to somebody under 600 score, an institution. That's usually the guideline.
Sure. And I think you'd already kind of talked about the Airbnb loans. Are they asset-based, no doc loans? Is what Dee's asking. So
Yeah, they're not asset-based, they're income-based. The income of the property is what they underwrite on those loans. If you have a property that doesn't debt coverage, a lot of times these real expensive properties, like if somebody's buying a $2 million house for a vacation rental, and they'll ask the appraiser, well, what's the market rent on a $2 million house? Well, how many $2 million houses are in the rental pool out there? Not too many to get comps from or anything.
right.
So a lot of times the estimated rental income will not cover the debt. But if you come to Ron at A to Z Capital, I have a lender that if it's under 1-to-1 debt coverage, the loan to value drops by 5%. So if you were doing a 75% loan, the fact that it doesn't cover, it would drop it to a 70% loan, and the interest rate would go up a half a point if we don't have proper debt coverage. So there's an option for that loan out there. I have almost a solution to almost every scenario, you know, and that's why I urge you, if you have a loan and you have a deal, to pick up the phone and call me. If I don't answer the phone, leave me a message or send me a text. I promise I'll get back to you within the business day. Sometimes I get a little overwhelmed, one call after another, and you got to be patient. It might take me an hour to get back to you, but I always return my calls on a daily basis.
Yeah, and actually touched on that. Someone's asking me actually, do you prefer us to reach you by phone or email first? Do you have a preference?
Either or. A phone call is usually more effective because I can ask all the pre-qualifying questions, and within a couple minutes conversation, I'll know exactly which way to steer you and what advice to give you.
Do you think, like, if you're new, should they call you first to get pre-approved, or would you rather them have a deal in the works or have something under contract? What's your preference?
Call me first, so you know that we know that you're capable of getting financing. I advertise with Bigger Pockets. I think I'm number one in Florida on the list for Bigger Pockets. Does everybody know what Bigger Pockets out there? That's a website that has all kinds of educational podcasts and networking between investors. It's a very educational, informative site for you. Those of you that want to learn more about real estate and investing, I highly recommend you join Bigger Pockets. Everybody knows about Bigger Pockets, and I advertise there. I get phone calls all the time from brand new investors that want to get into buy, fix, and flip. And I'm listening. And I know the answer to this question when I get to it. How much liquidity do you have to work with to start your real estate career? Is a question. Sometimes I'll get an answer, oh, I have 5,000 or oh, I have 10,000. That's not going to work. You need more than that to get involved in real estate. Unless you work with a niche, you'll finance 100% of your student.
Absolutely. And what about, the question, this just came up also, what about self-directed IRAs? Do you lend?
Yeah, you can do that. And they're difficult. I'll do hard money loans on them. I'll probably cut the LTV back maybe 5% because there's no personal guarantee. If it's an IRA loan, you can do the loan, but in order for the loan to be IRA compliant with the IRS rules, you cannot have a personal guarantee. It has to be a non-recourse loan. So there are people that do it. I'm not a big fan of it because the lenders out there for a long-term loan, they're gonna be at like a 50% loan to value on a non-recourse loan. And I've done a couple of them and I said to myself, I'm not doing this anymore because the few lenders that do it, they treat you as if they have a captive audience because there's only a couple lenders that do it. And they're not very friendly, with their loan conditions and everything. They tell you, the one I did, the guy was perfect. He had all the money in the bank. And they started out saying, oh, we'll do 50%. And then after it came back from underwriting, oh, we only want to do 40% on this one. So I don't like IRA loans. I don't like where there's no personal guarantee unless you're going to do a flip. If you're going to do a hard money flip, I'll loan you the money with A to Z Capital Funds. I'll cut the LTV back by 5%, and I'll give you the money on a short-term loan. But they have a lot of people out there talking about buying properties with IRA accounts, and to my opinion, it doesn't look like it works out very well for the investor.
Yeah. It's definitely harder. Most of the people I know, like even myself, I bought but I had the full amount. So it's a little bit different, if you don't use the loan and you have the full amount, it's a little bit easier. But exactly what Ron's saying, lenders want a personal guarantee. They want to feel comfortable on what you're doing. Jarvis is asking, how can I prove that I have experience in fix and flip? When we talk about experience.
Give me the addresses of the sold properties.
There you go. Pretty easy.
Yeah, a lot of people say, oh, I have a lot of experience. Oh, okay, tell me about it. Well, I helped my uncle rehab a house, and that doesn't count. It has to be your deal in your name, your LLC or your name that did the deal for it to count as an experience. To get the best interest rates, when I'm doing the loan, 80% of the purchase, 100% of the rehab, to get the best interest rates, you need to have 5 or more. And then under 5 or more is maybe a quarter of a point higher. And if you have no experience whatsoever and you're a brand newbie, the rates are about a half a point higher.
Yep. And what about, it's funny, I'm surprised no one's actually asking, but I'll ask you, is how fast can you close?
That's a good question. It depends on the type of loan it is. If it's a hard money loan that A to Z Capital's doing it through our money or one of our investors' money, we can usually close them as fast as we can get a title commitment and a lien search done. That's usually a week, 10 days, somewhere in that range. That's the most optimal closing. I don't like to overpromise and underdeliver. I've heard people saying they're going to get a loan done in 48 hours. I don't know if that happens too often. I don't know any title companies getting back with the lien search and a title commitment in 48 hours.
Not that I know of either. Same thing.
But there's a lot of people out there saying they do it, but I think that's just to set the hook, it never happens.
Well, the thing is, like, you actually have the money with your portfolio loan, so you could fund it. It's just not, if you don't have the title and lien search, you're not.
Then it's not a safe loan for my investor, and I'm not going to put my investor at that kind of risk. I got a lot of phone calls. People ask me, oh, I want to buy a property at Broward Auction or Palm Beach. Can you fund the deal? No, I can't fund the deal. If you're going to buy at those auctions, you need to have 100% of the cash to buy the property. After you buy the property, I can cash you out and get you maybe 75% of your money back. But you need to pay all cash. I think you have to put 10% down in each, and then you need the other 90% within 24 hours. And if you don't come up with the other 90% in 24 hours, you lost your 10%.
Yep. What about, are you seeing right now, because obviously prices are moving pretty fast. So are you having issues with appraisals? Like on the purchases, or what are
sometimes, but really not. I mean, the appraisers have been pretty good. The appraisals that I've been seeing recently have been coming back pretty high, and they've been working out pretty well. But I'm not going to say we never have an appraisal issue. Sometimes they come back and we don't agree with them. And then I'll have to supply the comps to the appraiser, and sometimes I can get the valuation overturned. It's a fight sometimes.
Absolutely. The other, Adrian, I know Brian's kind of already touched on this. He's asking what determines how many points you charge on a loan. So obviously it depends the type of loan, experience, loan to value. buying down the rate. So there's a
loan
lot of different,
size and all that. Yeah, it's,
yeah, it's
most of the
no,
loans I've been doing recently on the DSCR loans, I've been charging 1.75.
there you go.
Most of the deals, if it's $100,000 loan or something like that, a little tiny loan, I probably charge 3 points.
Yep. There you go. And then again, if there's enough money in the deal, don't worry about the cost of money, especially if it's short term. It's being able to leverage it.
Yeah, without
into
the money, you can't do anything,
Yeah, and even people that have money, right? Like I know, Ron, you work with a ton of investors. I know a lot of investors. We try to leverage as much as we can, right? So you could do multiple deals. Once you start getting good at this, instead of doing one deal, you might have 4 or 5 deals at the same time. And to put up all that money might be a challenge out there. And even though rates have been creeping up a little bit, these are relatively low rates. Like
compared to historic in the market. Yeah.
Yeah. Latasha's asking, do you lend in Illinois?
Yes.
There you go. You're set with that.
The
Jose,
states that are hard to lend in are New Hampshire, Vermont, Minnesota, South Dakota, states where they don't allow prepayment penalties. And if it's a state that has some ridiculous laws that only protect the consumer, then lenders don't like to loan there and they'll be on the blacklist. And there are usually about 7-8 states in the union that are on the blacklist.
perfect. And Jarvis is asking, how long does the LLC has to be active for you to lend to it? Is there a
Right away.
minimum?
Right away. Yeah.
Yeah. And Jose is asking, should I create an LLC before buying a house?
Yeah, I
Yeah,
think so.
mean,
If
yeah,
you
because-
know you're going to buy one, you might as well get the LLC rolling. So when the realtor says, okay, who's buying the house? You'll say ABC LLC, here it is. And then they'll write up the contract that way. Plenty of people don't have an LLC when they make the deal and it's in their name. And they'll open up an LLC. It used to get done in 24 hours. I think it's 4, 5, 7 days now.
Yeah.
And as the loan is in process, we provide the LLC information and the realtor gets you an addendum to the buyer to be in the LLC. And that's how that works.
Yeah, but I agree with you too. If you're going to get into the real estate business, the investing business, you might as well go ahead and set up the LLC, right?
Yeah, get it done up front.
Yeah, it's just
Especially in
unless-
Florida, because it's required for a business purpose loan for the loan to be in a business entity.
Yep, and I know we didn't even touch on this, but on these hard money or these investor loans, can they be can they live in it?
No, you're not
So-
supposed to, no.
Yeah, so that's why I want to make sure that they know that, again, we're talking about investor loans, guys. So again, you can't be living in it at all. Banks or lenders don't like that. It's a little bit harder.
Business purpose loan, it's referred to as.
Yep.
There's just so the people out there understand, there's a home loan, which is for a primary residence, and the law reads that it's for personal use or family use, then it's a home loan.
Yep.
An investor loan is for business purpose only, for investment purpose only. So on a home loan, they're very highly regulated by the federal government. They have that Dodd-Frank Act, the RESPA, the Truth in Lending Act, all that's in play on a home loan. There's more underwriting, more regulation. After the crash of 2008, the government came in and put lots of regulations on a home loan for family use. On a investor loan, none of those regulations exist. And it's a lot easier to get a business purpose loan done.
Absolutely. And Dee's asking, what would be the max LTV on a cash out refi on a Burr deal? Did you say 75% or you go actually up to 80?
We go to 80, but there's a credit score requirement. You need to have a 720 score to get the 80 cash out.
Yep. And Avi's asking, do you do portfolio loans? If so, what kind of rates are we looking at on some of your
Yeah,
portfolio?
well, I was talking about that earlier. Yes, we do portfolio loans. Has to be greater than 4 properties, and the loan amount minimum is 500,000. So on 5 properties or more for a blanket loan. And the rates are I haven't priced one out recently. They were in the fours. I'll bet if I called up today, they're probably in the fives by now. You know, rates have gone up in the last month and a half.
Sure.
And if you're ready to do something, if you have a property that you want to cash out now and for not, I suggest anybody that's going to borrow money to try to get it done now. Rates will be going up a little bit by a little bit throughout this year. So they are saying.
Yep. And Kevin's asking, is there a way to get a loan for an Airbnb property rental with no other income to show, but I have cash to put down?
Yes, that would be that loan that I talked about. You know, we do the 30-year fixed or the 40-year fixed with the 10 years interest only. Yeah, you don't need to show any personal income for that loan product. You need the credit score and you need the cash to close and you need 6 months reserves.
Yep. What about, I know we talked about multifamily loans. Are you doing any other kind of commercial loans whatsoever? Or if they want to buy a business and the building, or is there, I know since you do so many different things, I don't know if that's in
Yeah,
your.
I mean, I do them, yes. It's not the main. A lot of times I have a couple strip center loans. I have a chiropractor office loan that I did hard money. If the deal makes sense, we'll find a way to get it done. I'll look at the asset and we'll loan accordingly. I can get just about any deal done, residential or commercial. Now, if you come to me, a lot of people say they found a good deal on a commercial building and it's empty and they're going to fix it up and everything and get it rented. They don't have all the products they have like on residential properties, buy, fix and flip loans. They don't have that on commercial properties. An empty building, I'll probably loan you 60-65% of what we think it's worth as is. And you're going to be on your own for the down payment, the closing cost, and the renovation money. But those can be some very, very profitable deals. You know,
Yeah.
you find an empty commercial building, sometimes you can buy them for 30-40 cents on a dollar and make a huge profit on them. It's probably more for the more experienced investor to get into the commercial arena.
Yep, makes sense. Jason's asking, what does he mean by I can cash you out? Does he mean you will purchase your property? Yeah, Ron's not going to buy your property. It's number one.
Cash out refinance is what I was talking about.
Yeah.
We can get you a cash out refinance right after property stabilized. You know, I have a loan going right now. The woman bought a strip center in Miramar that had 4 units, a commercial strip, and another property that had 2 single houses on Taft Street. One was a chiropractor office and the other one's an insurance agency. So they're classified as commercial. Now, the strip center, when they bought it, has 3 units and only 1 unit was rented. So there was no commercial loan there with an institutional investor. It was 2/3 empty. We funded it with hard money, gave them 65% of the purchase price. And then the 2 houses, there was 2 houses. One was not occupied and one was occupied for a long term by a chiropractor. Same thing. We gave them 65%. Now they've had this loan out for a year and the properties are fully stabilized, fully rented. They've got a rental history of all the units being rented over a period of time. The building is stable. And I am working on that right now to get them a loan, a long-term fixed rate loan, 25-year fixed rate. They're probably going to get somewhere around 4 3/4 and take out my hard money loan with the 4 3/4 loan. Most hard money lenders don't do that. They only loan hard money. But like I said in the beginning of this little seminar, is that we do everything. So we are going to help you with your exit strategy because we know that you don't want to borrow hard money forever.
Absolutely. And I think you kind of touched on it. What's your minimum loan amount and your maximum loan amount? Do you have I don't know if you have a max, but what's your minimum that you'll touch? Was it 100,000 on the longer?
About
term?
100,000. You know, every once in a while we'll do it a little bit less than that, but 100,000. I have a couple hard money loans out that are tiny ones, 50 grand or something like that.
Yeah,
But
it's just that you're gonna hit that minimum of the 3,000, right? The flat fee.
yeah, if somebody comes to me, a lot of times I'll get somebody to come to me that has a free and clear property and they don't have the money to renovate it. It needs a roof, it needs this, it needs that. And they'll ask me, hey, it's going to take 70-80 grand to rehab the property. I'll give them a 3-year term loan and let them rehab the property. And then when it's looking great, fully stabilized, that's the time to go for the long-term fixed rate loan after it's all fixed up, ready to roll, you know?
Let's, you know what, let's kind of talk about the rehab loan. Let's say you're going to put up 100, % of the rehab loan. How does that work? Right? Meaning they purchase it, obviously, and are you doing draws, or do you want to kind of explain how that really works? Do you need a contractor report, or what do you
Yeah,
got?
don't need a contractor report unless it's a real big rehab. You know, if it's a $800,000 property with a 250,000 rehab, we're gonna want to see your contractor make up the estimate, you know? If it's a simple rehab, a $200,000 purchase and a 35,000 rehab, you can fill out the rehab budget form yourself.
Perfect. And
How does it work?
yeah, like do you give them the full 35,000 at closing, or
No, the money goes into escrow.
correct?
And the lender that I use, that's great to work with, that doesn't disappoint me, the money goes into escrow, and you have to, like, let's say it's a $40,000 rehab job. You have to lay out maybe the first 10 and maybe go to Home Depot and use your credit card to buy the supplies. And after you get up to about 10, then you call for your first draw. The draw inspector will come out, take pictures, costs $300 for the draw. And gives the report to the lender, and the lender wires the money into your business account, usually within 48 hours. Then you do more work and then call for another draw. The money's released as the work is done. And a good thing with my lender is many lenders put the money in the escrow account, and they charge you interest on all the money from day one. We only charge the money on the rehab work as you draw the money. So you'll get a different monthly interest payment every month as you draw the money.
Wow, that's pretty impressive. Yeah, most charge from day one. That's pretty cool that you have that lender doing that. Jarvis is asking, when you fix and flip and you want to keep the rental, do you loan for the 30-year mortgage? So can they, I guess the question might be, can they transfer it from a fix and flip, maybe pay a point or two and convert it, or is it truly
They got to do a whole new loan. The fix and flip lender doesn't do the loan. A couple of them, in fact, they do, some of them do long-term loans, but it's a whole brand new transaction.
Exactly. And Summer's asking, can you refresh my memory about a brand new investor that wants a fix and flip loan and rehab loan 6 to 12 months? Not sure what you're actually asking on that, Summer.
Some lenders offer the 6-month loan. I don't like it. I think it's a trap, you know, because then they charge you points to get another 3 months. And, you know, and it usually is not to the investor's benefit, it's to the lender's benefit, those real short loans, because they know you're going to need more time. Every time you go back for another 3 months, it's another point. I recommend that you just get into it with a minimum of a 12-month loan.
Yep, absolutely.
What else was the question?
That was pretty much that. It was about a newbie, about 6 to 12 months. So yeah, I wasn't really sure what her actual question was.
Okay, take a 12-month loan. Give yourself some time.
Absolutely. So I think, wow, I mean, these guys threw like 1,000 questions at you, Ron.
How many guys are in this meeting? How many people are attending?
We're about 70 people. So.
Oh, okay.
So we're give or take. So we're almost actually out of time. So a couple of little last things, like obviously, you know, what tips would you give a newbie that's getting into real estate?
Boy, I don't want to throw a wet blanket on anybody's dreams, you know. Persistence, you know, I mean, not everybody's successful at this game. The people that I find that are successful are the people that have that burning desire, that they don't want to have a life of mediocrity. They want to have a life with a more abundant lifestyle, you know, and that's why people get into real estate. And that's what I love about this real estate business, is you don't have to be a rocket scientist to be successful in real estate. It's a nuts and bolts business that anybody can learn. And I have borrowers that are older than I am, that have been in the game for a long time. I have a guy who had a lawn service in Miami, he worked it, he retired at 58. The guy owns like 60 properties in Miami, this guy. And
Wow.
he just had a lawn service, he bought properties. I look at what he paid for him 20 years ago. A lot of them he paid 25, 30,000 for him in Liberty City and stuff like that. He's got a portfolio of 60 properties. I think the guy's probably worth, I don't know, 60 times 275 a property.
Yeah.
He's probably worth like $16 million, this guy,
Yeah.
So it's possible. Anybody can do it. The harder you work, the luckier you get. What helped me, if you want to know what helped me, many years ago, I ran into a client that was my same age as I, and the guy was very wealthy. And I asked him, I said, how did you accumulate so much real estate and become so wealthy at such a young age? And he said to me, I asked that same question to somebody about 20 years ago. And he explained that he was a poor kid, grew up with no father and blah, blah, blah. And he had a route in his neighborhood where he would have a car washing service, and he would go to people's houses and wash their cars out in the driveway and come back every week. And there was this wealthy guy that he washed his cars for every week. And he asked that same question. And the guy took him into his office and he showed him the book of Napoleon Hill, Think and Grow Rich. And he said, the difference between me and most people who read the book is I actually did what the book said, And he says, I owe my success to following Napoleon Hill's instructions. And I says, oh, wow. What did I do is I went and bought that book, and I've read it probably about 15 times. And I think that Napoleon Hill was inspired by the Almighty. I mean, the wisdom you'll find in that book is unbelievable. And I read the book quite often. Whenever I feel a little bit down and things look a little difficult in life, I'll pick up Napoleon Hill's book and read a chapter or two, and it brings me right back again, because anybody can do it. And everything is in between your mind. If you think you can't, you won't. If you believe in yourself and you work hard and you refuse to fail, you will find your way. You will fail a couple times. You'll make mistakes, you'll stumble, but eventually you're going to get it. I'm 67 years old, and I've been up and down the ladder 3 times in my life. And,
I know the feeling.
And it doesn't come easy, no, even in Napoleon Hill books says the laws of nature will not allow any man to achieve abundance or success until he's paid his price. You don't get to join the club until you pay your price. And that's why only, not 100% of the population is financially secure. The people who work at it will get there. And that's the most important thing. I highly recommend that you join Bigger Pockets. You read Napoleon Hill, Think and Grow Rich, and read it again and again and again. It'll help you evaluate yourself and find your weaknesses and your strengths. And where you need improvement, it'll bring to it's very good for self-evaluation. Somebody like me needs, left to my own devices, I'll go sideways. So I need to have a roadmap, and I need to read it all the time to keep me on the right track. And I think a lot of people are that way.
Yeah, 100%. I read a ton of books also. And the thing is, like, I know everyone's talking about the hot market. Even when the market wasn't hot, it's still a good time to buy. Meaning the numbers are the numbers and cash flow. So the prices, skyrocketing 20, 30% in the last year, or the interest rate, change your mind about it. It's easy to talk yourself out of it. The good thing is with lenders, right? You use Ron, he's going to tell you that, hey, I can't lend more than that. That's probably not a good deal. So it's almost, to an extent, he's in the deal with you, with his, by lending, whether it's his portfolio loan or it's one of his other, lending partners, they have a vested interest in you doing well. They do not want to own the properties. So that's one of the things I think that's pretty important. I know that Alexa, do we have a winner, or is that what we're getting to?
Yes, I do. I have a winner. So drum roll. Our winner today is Jay Johnson. Congratulations. I know you've been coming to our webinars, so it's a matter of if not when. Keep coming to the webinars if you want to win the giveaways, but Jay Johnson is our winner of the Amazon Echo device. Yay, you're welcome, Thank you to Ron. I'll get that all sorted out for you guys. I just want to thank everybody for being here. Thank you so much, Ron. And those little baby steps were awesome. I totally agree. Bigger Pockets is awesome, and that book is also amazing. So those are great baby steps. I'm super grateful that you gave us those to take away today.
And
Does everybody
actually,
have my phone number out there and my contact information on the screen?
Yeah,
Yep.
I'll send everybody a thank you email after this webinar. So everybody look out for that thank you email from me.
yeah, and the other
Okay.
thing is like, you know, if you want to actually meet Ron in person,
Mhm.
yeah, he does have legs. So come to our April meeting, you know, and actually, I mean, in 90 minutes, we gave you a ton of information. Do not be overwhelmed, right? So the point is, you have a deal or you're working on a deal, call Ron. He's going to help you structure the right deal for you, or he'll say, hey, this isn't the right loan for you, or, you know, it's not the 6 months, you're probably better off doing the long term. Again, you know, he's on your side. So you want to give him the full picture. I always see that mistake, especially with newbies. You know, they don't want to tell their lender everything. No, tell him everything. He's going to find out, right? So if you had some credit issues in the past, maybe a bankruptcy 10 years ago, it's going to come up. Just make sure you tell them, you know, tell them everything that you have about the deal. And, you know, again, Ron's on your side. He's not like the other lenders that you kind of have to hide out and say, I don't want to tell him anything. So, Ron, I want to thank you so much. These 90 minutes went pretty fast.
Okay, yeah, was it that long? Time flies when you're having fun. By the way, one thing before we say goodbye, you mentioned something. If your credit score is a little shaky, we can help you with that too. We have a product called Wayfinder where we can get you rescored and get that credit score up if it's necessary.
Oh, that's awesome. Yep. So yeah, see, Ron's all about at A to Z Capital. You're all about solutions. So I think it's pretty impressive on that end of it. Again, you know, make sure you give us a 5-star Google review, especially on Ron's webinar. Again, all our recordings will be on our YouTube channel. They'll be up in the next couple of days. And, you know, we're really committed here at BPM to really work with our vendors. The cool thing is, like, I've known Ron for years. So I get to have these private conversations with them about what's going on. And we're really pushing our vendor partners to do these webinars, because as the market's changing, you know, lenders are changing, there's more things coming in, and it's been pretty awesome all the way through. So Ron, thank you so much for giving us your time today, and, you know, really educating our members here today. So
thank you everyone for your attendance, and feel free to call me at any time. You have my phone number. Thank you.
Awesome.
thank you, guys.
Guys, have a great rest of your day. Thank you, Ron. See you guys next week. And don't forget April 6th.
Yep.
Bye-bye.
Signing off. Bye-bye.